You don't make money by buying stocks, nor by selling them. You make money by waiting. Mohnish Pabrai. In this video, we are going to study the biography and philosophy of the best Indian investor in history, who has achieved an average annual return of 25% since the founding of his Pabrai fund, much higher than that of the S&P 500 index, even surpassing his great teacher and mentor, the legendary Warren Buffett, managing to multiply the invested capital several times. Mohnish Pabrai was born in Mumbai, India in 1964. Even though his family was middle class, from a young age his father instilled in him a mentality focused on working hard, being perseverant, and having an excellent education. His father was one of his great role models. He was a persevering entrepreneurial engineer, despite having different failures, especially in business. When he was 10 years old, he saw his father declare bankruptcy. But despite the failure, Pabrai was able to observe how his father continued to make a living and support his family. Despite the difficulties, Pabrai always had what it took to dedicate most of his time to his preparation and education at school. Part of the difficulties of his childhood helped him to have a strong character that could withstand difficulties, with a great capacity for resilience to overcome adversity despite the difficulties. At school, he already showed an academic performance far superior to that of his classmates, standing out especially in mathematics and exact sciences. At the beginning of the 80s, still very young, he traveled to the United States where he enrolled in the prestigious Clemson University in South Carolina, where he obtained a degree in computer engineering. At university, he already demonstrated having exceptional abilities as well as having a discipline that allowed him to stand out among American and other country students. He finished his degree in record time and graduated in 1986. His first job was at Tellabs in the IT sector. Despite being a technology company, in addition to becoming an expert in high-speed data networks, he also managed to learn how to carry out negotiation processes, which would later be useful in his activities as an investor. His rise in the company was dizzying, reaching management and high-responsibility positions. The team he was part of had grown in 3 years from 7 to 800 people in a short time, which led to his work becoming increasingly routine and repetitive. But when he was 25, his father visited them in Chicago and suggested that it was time for him to stop working for others and start his own company. Pabrai told his father that this was not in his plans, because he had seen with his own eyes how, during his childhood, the family often lost money in business, even going bankrupt. But his father, contrary to what he expected, explained to him how these experiences are what make life fun and make the experience of living meaningful. Despite not having had much success in his business, his father explained to him how in a company he would not see a great reward because he would only be a cog in a large wheel that could be easily replaced. In addition, he would not have the potential to develop all his creativity and negotiation skills. Pabrai had learned without realizing it from his father's experiences and failures that sometimes a high dose of resilience is required. Because you have to withstand the first storms when you have a company, this also allowed him to focus on trying to identify very well the disadvantages of a business to find solutions and create its competitive advantages. This is how in 1991, at only 28 years old, he founded the company Transtech in the computer and programming sector. The company's initial capital was $100,000, of which $30,000 was from savings, and he took the risk of going into debt for $70,000, a fairly high sum for his age at the time, which demonstrates the entrepreneur's confidence in his ability to generate value. Once again, thanks to his tremendous abilities, Pabrai managed to make the company successful, becoming recognized in the consulting sector in matters of information management and systematization. At just 30 years old, in 1994, he first met the great Warren Buffett through magazines he read at airports. Pabrai found Buffett's investment philosophy very interesting from the start and was curious about the fact that Buffett had achieved a sustained annual return of 31%. He began to become interested in the power of compound interest and its ability to create wealth in the long term. With the same perseverance and consistency with which he managed to make his engineering company successful, he focused on learning about the stock markets and investment strategies. Pabrai's motivation was to have the knowledge and strategy to multiply the wealth he had. His goal was nothing less than to multiply the $1 million he had in assets by 1,000 times, seeking to turn it into $1 billion. In 1995, Pabrai made one of his most successful investments in his early days, buying the computer company Satyam Computers. This investment multiplied by 140 times in just 5 years. In 1999, he managed to sell his company Transtech for $20 million to Kurt Salmon Associates. In the same year, 1999, at just 35 years old, he launched his investment fund, the Pabrai Investment Fund, with an initial capital of just $1 million. His investment strategy was the same as Warren Buffett's, which consisted of investing in stocks with prices below their fundamental value, but with a growth perspective. One of his best operations was when he masterfully managed to sell the majority of his stock portfolio in 2000, just before the dot-com bubble burst, making profits of $1.5 million at a time when practically all operators and funds had the largest losses in the history of the stock market. In 2008, together with a friend and investor Guy Spire, Pabrai booked the now famous dinner with the legendary Warren Buffett to hear firsthand his investment philosophy and the secrets for selecting the best stocks. But in the 2008 crisis, he had one of the biggest drops in his assets, as in 2007 he had $84 million in assets, and at the lowest point he had $20 million. But again, his high level of resilience allowed him to maintain his positions and recover quickly in 2009 with a return of 130%. His successful investment decisions led to tremendous results that allowed him to multiply the value of his fund. Since its inception in 1999, the Pabrai Investment Fund has accumulated an impressive return of 1,204% between 2000 and 2018, exceeding the return achieved in the same period of time by the S&P 500 index by almost 10 times. Since the foundation of his fund, Pabrai has achieved an average annual return of 25%, much higher than that of the S&P 500 index. His best return was achieved in 2009 with 120%. For many, Pabrai's strategy is to replicate or clone the best investment ideas of famous investors such as Buffett himself. Pabrai himself admits that everything in my life is cloned. I have no original ideas. He began investing in companies in the automotive sector in 2008, when no one looked favorably on investing in this sector. This decision showed him that in order to achieve success as an investor, in some cases one had to go against the majority, in addition to having enough patience to see the fruit of the purchases made. In 2012, Mohnish Pabrai invested $60 million in the automotive company Fiat Chrysler, a position that at that time was 14% of his investment fund. He achieved a 60% return on that operation by selling his positions a few years later. Pabrai invested in the semiconductor company Micron since 2018, initially making purchases with shares at $41, later making some purchases even at $33, and was able to obtain very high returns by selling his shares in 2023. Contrary to what many believe, Pabrai has had some loss-making purchases, one of these cases being the purchase of shares in Brookfield Asset Management BM, a Canadian company with more than $200 billion under management with investments in energy, real estate, infrastructure, and banking. He made purchases in the fourth quarter of 2022 with an entry price of $39 and later at $33. For the second quarter of 2023, he sold his entire stake at an average price of $31. The stock is currently trading at $48, meaning if Pabrai had held on to his positions, he would likely have come away with a nice return on that position. Pabrai's investment philosophy and strategy is simpler than it seems, as it is based on replicating or copying the investment strategy of such leaders as Warren Buffett and Charlie Munger. Before continuing, remember that in the description of the video you will find the link to the best course to learn technical and fundamental analysis for investing in stocks. Pabrai claims that he is a shameless imitator and that he has no original ideas. From the beginning in the world of investments, Pabrai focused on studying Buffett and Munger in depth, going so far as to claim that these investors had managed to decipher the laws of investment, just as Newton had found the laws of physics. Pabrai considered that Buffett's investment strategy was quite simple and apparently boring but tremendously effective. It seemed absurd to him how many fund managers ignored Buffett's philosophy. He saw it as similar to what happened in the history of physics, where some supposed experts refused to accept the existence of gravity and Newton's laws. Therefore, just as Newton's laws were undeniable, Buffett's investment principles could not be negotiated or ignored. The three most important principles were to invest in stocks with a margin of safety, one of the main postulates of Benjamin Graham, Buffett's mentor, which implies that one should buy stocks below their intrinsic or fundamental value, a strategy that helps reduce the risk in an investment. The second principle was to understand that when you buy a stock, you are buying a company, not just buying a piece of paper. The third principle is to understand how the market is a voting machine, where the value of a company is often wrongly evaluated. Pabrai focused on a long-term horizon, generally holding his positions for a few years with a low turnover in the shares of the portfolio, a strategy contrary to that of novice investors who often do not hold their purchase shares for even a few months or days. Pabrai has an investment portfolio concentrated in a few companies. Currently, for example, a good part of its portfolio is concentrated in only 4 companies that we will review later. Although the investment strategy is simple, it requires an in-depth study of the companies where you intend to invest to try to buy shares of undervalued companies, but that have great potential, to buy them at the best possible price and try to keep them in the long term. In the fundamental analysis, Pabrai carries out a review of all the critical factors that could affect the performance of a company in the future. Its strategy implies that, although it makes long-term purchases, it requires that you constantly look for investment ideas to find companies undervalued by the market. To manage risk, Pabrai focuses on studying companies in its circle of competence. For example, it has recently concentrated on the energy sector, specifically coal mining companies. For Pabrai, knowing a sector allows him to understand the risks that a particular company has, in addition to understanding the competitive advantages and trying to project cash flows. Unlike other investors, he does not diversify too much to manage risk. In his opinion, a portfolio with 10 companies from different sectors is enough to have a good diversification. Pabrai assures that when you have participation in more than 50 companies, you lose control of the investments and you cannot know the companies in detail, their limitations, and the potential they have. Another element that Pabrai takes into account is investing in companies that have effective leadership, which can guide companies along the right path, in addition to having an unquestionable track record and ethics. His investment strategy is based on the Hindu term Dhandho, which means effort to create wealth, an approach that, although applicable to daily life, can also be used in capital markets and investments. To select companies, Pabrai places undervalued companies in his circle of competence, which are listed at prices below their fundamental value, to evaluate whether they have a competitive advantage or economic moat by reviewing elements such as their brand, the technology they offer or have, the loyalty of their clients, and the profitability they have on their income. His concept of capital management seeks an efficient allocation of capital, improving the value for shareholders, without neglecting risk management and buying shares with a margin of safety to protect against permanent losses, constantly reviewing investments and circumstances that may change at any time. His investment philosophy is found in his work, The Dhandho Investor, the value-based method of low risk and high return. Another well-known work was Mosaic, Investment Perspectives, where he makes an excellent analysis of the investment principles of Benjamin Graham and Warren Buffett. Contrary to the strategy of other famous investors, Pabrai avoids investing in startups and initial public offerings of shares or IPOs. He tries to focus on businesses with a good level of maturity that he can understand. Currently, it is estimated that his fortune is about $2,000 million. Mohnish Pabrai's current portfolio invested in shares is valued at about $232 million, concentrated at this time in 4 companies. It is interesting to observe how his investment portfolio is quite focused on the energy sector, mainly in coal mining companies. This is a substantial change since in the past Pabrai had concentrated mainly on companies in the technological, financial, and automotive sectors. The first position in its portfolio is Alpha Metallurgical Resources, AMR, with a 54% stake, which it began to buy in 2023 with an initial purchase value of $152, then added positions at a price of $195. The share reached over $402, currently trading at around $224. Although the share has fallen from its maximum value achieved at the beginning of 2024, the profitability of the initial investment is close to 50% in just over a year. The second position is Arch Resources. Arch, with a 25% stake in the portfolio, it is a large coal mining company, in which it began to invest in 2023. The initial purchases were for around $110, currently trading at $145, achieving a profitability of over 25%. The third position is that of Consol Energy CIX with a 7% stake. It is a coal mining company based in Pittsburgh, Pennsylvania. It was a company in which it began to invest in 2023. This investment has had a return of more than 80%, since when it bought the shares they were trading below $60. Currently the price is above $110. Mohnish Pabrai's investment philosophy and strategy of trying to follow the investment ideas of other investors with more experience and proven results can be easily replicated by novice investors, since websites such as Dataroma allow them to observe the positions and changes of some of the main investors. Remember that in the description of the video you will find the link to the best course to learn technical and fundamental analysis to invest in stocks. There is also the link to the best platform to buy stocks on the stock market, regulated in the United States. And finally, if you want to support us, there is the Patreon account to motivate us to create more content.